right. Hey, everybody, welcome. Today's David's Deep Dive. And again, this is an event that I give you more information about things that are really relevant to your life and to your business. And today we're going to talk about something that's really important to many people across the world. This isn't very tied to any particular religion, ethnicity, age group, or creed. This is all designed to support an individual. So before we get there, of course, if this is your first time watching this, my name is David A. Perez. I wrote a book called Building Your Own Economy, and everything I do in life is to push towards doing that. And if you want to learn how to do that, please get my book, davidaperez.com. All right. Today's topic is rich, right? When are you technically rich? This is something that most people, kind of joke about, they make comments about, they think about, but they don't really understand the concept. And I say that not because people are dumb. It's more people have a really different perspective of rich depending on your family, the way you were raised, who you associate with, where you work, what you do. Rich can mean so many things to so many people. But so today I'm going to define it the way that I see it and how it can impact you moving forward. So number one, right? Let's get clear on how to get rich. First, let's get some definitions. Let's talk number one about cash flow. Cash flow is the monies that flow to you. So monies that flow to you. So this could be your income. This could be your investments. This could be your husband or your wife. No. That could be a cash flow, but these are flows of money that come to your bank account, money that come into your pocket every single day or month or year. Rich is defined as cash flow in excess of your current liabilities. Cash flow in excess of your current liabilities. Now, it could be very simply put, it's probably passive, but we're going to get to that in just a minute. Okay. Income, the money's received or on a regular basis from an active or passive activity. These are things that come to you. Money, again, cash flow is what comes to you, different sources. Monies or income is the things that you receive regularly. So there are two types of income. To be very clear, there are two types of income. And the number one type is active income. Active means you actually have to participate. You actually have to do something. This could be your job. This could be your business. This could be something that you do, a side hustle, as they call them. A passive activity is an activity that you don't actually participate in, but it still generates income. This could be from investments. This could be from things. So let's talk about that, right? So active through work or business, passive through your investments. So to become rich, typically most people would think about being rich as what? Having a lot of money. Well, I'm here to tell you a lot of people have a lot of money and they're not rich. I learned that, being in the tax business for so long, I've had the opportunity to see incomes from all sorts, from making, $10,000 to making $1 million. I've seen companies who have done, 10 million and plus in revenue. I've seen individuals who make 600,000 a year, $800,000 and $1 million a year. All of these companies, all these people that I'm talking about have challenges and may not be rich because, as we know, there's a statement, right? The more your income goes up, so do your expenses. They typically go in very close proximity to each other. Meaning if I make $100,000, my expenses get very close to 100. If I make 150, for some reason I get 50,000 more through my activities, I am probably around 150 again, and so on and so forth. So every time your income jumps, typically your expenses jump. And so many people will go through life thinking, well, I just got to make a lot of money. Well, that's not necessarily true because you could make a lot of money and still not be rich. You get that? You could still not be rich. So rich is really defined as passive income exceeding liabilities. Passive income exceeding liabilities. So here's an example. If I had liabilities, just to be clear, I should have put a definition to this, are expenses. They're things that you need to live. There are your light, your water, your mortgage, your rent. It's your food. These are all liabilities, by the way. Anything that costs you money and you don't get a return from it, food is one of them, although it can be nutritious and nutrient rich and all those things. It's still an expense, right? Your water, your light, your gas, your car payment, your gas and your car payment, those things, these are all liabilities. Now, let me tell you what this means. When you have passive income that exceeds your living expenses, your liabilities and your living expenses, you are now rich. Let me say that again. When your income passively comes in and it exceeds your liabilities, you're rich. So most people think being rich is, well, I have to have $1 billion. No, no, no. What if you had 5 rental properties and each one of them gave you $1,000 a month that you got to keep, not 1,000 and then you subtract the mortgage or whatever. I'm talking about you just got to keep it. 1,000, 1,000, 1,000, 1,000, 5,000 a month. That's $60,000 a year. Okay. And what if your liabilities, your car payment, your mortgage, your food, your groceries, your phone bill, and all that was $50,000. So you had $60,000 in passive income, $50,000 in liabilities. You're rich. You get it? You're rich. Because it's coming from a passive activity standpoint. So when people think, well, I want to be rich, it's not really that hard. The problem is most people's liabilities are so big that it takes a lot of money to be rich, right? It takes a lot of money to be rich. If you live well, it takes a lot of money to be rich. So when you make money, right, each and every day, that is called active activities, right? Working. When you receive money from not working, meaning from your investments, let's say you buy some crypto, or maybe you buy stocks, which are equities, which we're going to talk about. So these are things that come in passively. So how does this happen, right? It's investments in passive activities or equities, real estate, crypto, lending, business. So equities being stocks, bonds, real estate being tangible assets like the home or the buildings or the rental offices, crypto being Bitcoin, Ethereum, Cardano, all those things. Lending being, if you lend money to someone, for an example, a short-term loan, they give you an interest rate, very low or very good interest rate. That is a type of passive activity. And business income being income that comes from the generation of business that you don't actually participate in, partnerships, right? Relationships. These are things that you can build. And so when you think about business activities, this is one that can be passive if you really do it right. It could be just a business you put money into. So is being rich the goal is really the question. And I ask you guys, is that the goal for you? And let's answer that together in this group, right? Is being rich the goal? Having more passive income than liabilities? Yes or no? Is that the goal? Anybody have that as a goal for themselves? Did they know this before? I'm gonna look at my chat. Yes, this is the audience participation part. Yes, okay. So the goal is to have more income passively than expenses and liabilities that are exposed every month. So if this is the goal, just to be clear, I'm here to tell you that it can even get better. So think about it this way. What's better than being rich? And the honest truth is wealthy. So we're going to talk about that because most people confuse the two. And if you look up the definitions, just to be clear, wealthy and rich are really synonymous with each other. They're both the same in most cases. But I'm here to tell you, I think about it differently. Well, rich is when I have more passive income than I have expenses, right? And wealth is an abundance of valuable assets that exceed liabilities for far beyond one's lifetime, typically 2 to 3 generations. This is wealth for me. When my passive activity from assets being real estate, crypto, business activities, equities, when these things exceed so much that my liabilities could never even get close to them, typically past my lifetime in excess of 2 or 3 generations, that's wealth. That's where we want to be, guys. This is exactly where we want to be, is wealthy. We want to be wealthy, where we leave more money behind when we leave this earth that it could support 2 to 3 generations. And it doesn't have to be money. It could be assets like real estate that you leave behind. It could be stocks and bonds that you leave behind. It could be something that you leave behind that impacts future generations positively, not debt, wealth. And most people today will die with debt. Most people will die and leave their family with wondering ways of how to pay off the home, how to pay off the car, how to feed their kids, right? How to clothe the children. This is a challenge today. And for many of us today, that's just the way we were raised, right? We weren't raised to think wealth or rich. We were raised to think not even excess. It was like just enough. We need to make just enough to pay the bills. We need to make just enough to take the kids on vacation. We need to make just enough to get the house, just enough to get the car. And my belief here is that's how I was raised, by the way. Maybe you weren't, but I was. And my belief here is that we can break that cycle and we can start thinking bigger. And many people, just to be clear, will have this, like, people talk to me all the time and they're like, well, yeah, but it's easy for you to say all these things because you make money. And I'm like, well, I didn't make money always, right? And I didn't start in this position of in this mindset. I didn't start with this mindset. I didn't start with money. I didn't start with assets. I didn't start with anything other than just some ideas. And so I believe that the reason that I have the ability to be here and say I can talk about wealth and riches, if you will, is because I have advanced my knowledge and skills to be worth some money, which would then become something that I could exchange for assets and then eventually pay me passive activities. So I would tell you, if you feel like this isn't something that's possible for you, I'm here to tell you it is. You just have to get the skill sets that really are valuable to the world, right? Skill sets that are very valuable to the world are things people pay for. And I work every day to get more skill sets, and so should you. So I'm telling you right now, that's what it should be doing. So how do you become wealthy? Very simple. Focus on network rather than cash flow. So people think that cash flow is king. And I hear people always tell me I want to invest in real estate. I hear this like all the time. And they talk about this cash flow thing. Like, I want to make cash flow, bro. And I'm like, okay, that's cool. Like, cash flow is good. The problem with cash flow is it's a confusion. It's a cash flow, meaning the excess cash that comes off of a passive activity, the excess cash that comes off of a passive activity. And when I think about cash flow, I think people get kind of tricked. And they think when they make cash flow, they're supposed to use that money to go buy the Louis Vuitton purse and to go in vacation and buy a new car. The honest truth is cash flow is intended to be reinvested again so that you can build net worth. So whenever you receive cash from a asset, so for an example, if you have a rental property and at the end of the month you had $300, or $300 is what's left at the end of the month from what you made after paying all the expenses, $300. That $300 is not for you to go on vacation. That $300 should go find you the next rental home. It should go towards that. And the reason that you want to do that is because that's where you build net worth. Net worth is what you own minus what you owe. And that's what you get is what you call your net worth. Now, people don't understand this because they think that in order to be a millionaire, you have to have $1 million cash. No, in order to be a millionaire, you have to have $1 million net worth. Net worth is what you own. That could be businesses, that could be real estate, that could be cars, that could be stocks and bonds, it could be crypto. You get up the total value of all that, you add it all up together to come to a number. And then you subtract any loans, any debts that you have towards anybody, and then you should have what you'll call what you owe, what your net worth is. Very simple to calculate. So these three guys, Warren Buffett, Elon Musk, Jeff Bezos, these are three titans of the world. And they are actually, just to be clear, they are wealthier than wealthy. If you added all these guys' monies up, guys, like they could probably, support their own country, literally their own country. And the challenge here is that many people think these guys have a lot of cash. In fact, most of these guys don't have a lot of cash. Well, Warren Buffett has a lot of cash. He sits on a lot of cash. Most of their money is tied up in assets. They own real estate, they own companies, they own stock in companies. And most of the time when we think about these guys, we think, well, these guys, they just have so much money. They don't have a ton of money, although they have a lot of money. I'm not going to talk about that, but I'm just going to tell you, they're not just sitting on billions of dollars. They're sitting on billions of assets that in the event that they need something, they sell the asset. So what somebody like Jeff Bezos, or actually Elon Musk just did this, he said, I need $1 billion. So he went and he said, I have this much in stock, which is worth $1 billion. Can somebody give me $1 billion to buy the stock? And that's what they do. He sells stock to get money. He doesn't have $1 billion in the bank. He doesn't have $1 billion just sitting around. Most of these guys don't have a lot of cash. They have a lot of assets. They live off of those assets every single day. That's what wealth really does. So ask yourself these questions. Am I rich? Which means your income passively exceeds your liabilities and expenses. If you're not, how do we plan to get there? This is important. And then second question, do I have a wealth plan? Do I have a way to leave generational wealth? And most people, by the way, their generational wealth plan is to leave their home. I'm going to leave my house to my kids. And don't get me wrong, that's not to say that that's a bad way of thinking about things. But I will tell you this. In order for you to really seek and find success in the world, it's really not about what you accumulate here. It's about what you leave behind. And leaving a home is part of it, but I would promise you, if you could leave more than a home, if you could leave multiple homes, if you could leave money, if you could leave assets that really can help somebody in the future, that's what wealth planning is all about. So does anybody have any questions or some thoughts before I end here today? I'll go here. Q&A. Let me exit here. If you guys know me, oh man, I closed it. If you guys know me, I would answer any of your questions. Let me see here. For some reason, I can't get this open. If you guys are there, please be patient. There you go. Got it. Cutting too much liabilities, increasing assets, and learning new skills. Thank you. Yeah, thanks. Jeremiah, thank you. Paying down all as much debt as at the moment. Just to be clear, guys, I don't believe that paying down debt is an important part of the formula for wealth and riches, especially in an early age. Not to say that that's not a good deal, but typically, just to be clear, in the accumulation phase of life, which is what I'm in, which means between, let's say, 20 and let's say 55, my job is really to accumulate a lot of assets, even if there is some liability tied to it. And the way that I mitigate my risk or liability, the way that I do it is I use life insurance to mitigate that. So in the event that something does happen to me while I'm accumulating, I have life insurance to cover all the liabilities and take care of my wife and family. But once I hit the 55 mark, I should start thinking about, it may not be 55 for me, it may be 60 or 65. I plan on living a long time. But when I hit that part, then I call it the distribution phase of my cycle. And when I get to distribution phase, that's when I don't want to have a lot of debt. And the reason being is because that's when I want my assets to just cash flow for me and pay me all the time. So I don't have to worry about money anymore, that the money just comes through the door. It's in the mailbox every day or in my inbox or in my bank account. That's how I get it. So think about debt is actually good when you're building net worth and when you're building what we call wealth. It's not good when you get to an older age because you don't have a lot of time to pay down the debt. So you really want to structure and secure your assets through some sort of safety net, which is typically life insurance. All right, that's all I got for you guys today. If you want to connect with me, Facebook, Instagram, YouTube, whatever you want to connect with me, these videos all go up to YouTube right after the event. If you need anything from me, you can contact me at david@davidaperez.com or visit me at davidaperez.com. I really appreciate you guys, and I thank you. Let me see, there's a question before I end, and make sure it's not a question. Cool. All right, I really appreciate you guys. If you guys need anything from me, let me know. Have a great day. Bye-bye.